Good afternoon, everybody. Welcome to TraderMerlin Show. Yes, I have been sitting here talking to myself for the previous 6 minutes now. So 6 minutes, I've literally been sitting here talking to myself. My apologies to that. I guess I forgot to hit the go live button. So maybe that's what I get for going to the doctor's office. By the way, those of you who sent in comments, questions, concerns about myself or my dog, all is good. The dog has got a chest infection. Hopefully that's getting better and better and better. And, for me, it was just blood work, physical, and going over stuff where the doctor says, hey, you got to cut this out, more red, less red meat, etc., etc., etc. So here I am. Sorry for that. I literally have just been talking. I thought you guys were actually engaging with me. I was watching some of your chat. Thanks, Lori, for that one. I actually brought you guys up. So it is the 19th of August today. Hopefully you can hear me talking now. I do see it's going. And I put a poll out there. You guys saw the poll before the show even started. Before I dive into that, though, I want to go back to my talk track from earlier, which was I saw people talking about how hot it is. I saw Ricardo out there complaining how hot it is. Look, Ricardo, you got 88 degrees in Miami. You got nothing. I'm over here in the 90s. I'm actually probably in the high 80s. And then you got Phoenix. 111. So I will give it to Steve and Lori who are in Arizona right now, sweating away. You guys get the victory for hottest place in town. You guys are funny. Less fish. Oh man, yeah, maybe it was the fish. It's funny because I was on a roll. I was having a really good start to the show, and I'm embarrassed that I had to go back and take that one away. All right, so let's go into the topic du jour, which is it the 20th today? Jeez, Ricardo, you got me as well. Man, I'm all over the place today. What a mess. And I think I even wrote that on the beginning of the show, too. Okay, it's because I thought Monday was the 20th. There we go. So we fixed that one. Jeez Louise. So let me go into the topic du jour. The topic du jour I have is this graphic here with is a bear market coming? And I thought this was kind of an interesting topic because you guys may remember the show from Friday. On Friday's show, I had a graphic of a nice green backdrop with this kind of digital-looking bull because last week we had a really strong week. And I pointed out that it looked like we're coming up into some overhead supply levels, which we actually broke through the first one on Monday's session yesterday. And today feels like we kind of stalled out a little bit at some other supply zones. And, when you have a really significant market rally as we've had into areas of supply in a period of time where people are really questioning the markets going into September, going into October, those can be problematic periods of the market. So I created that little poll there, which I will probably cancel the poll now just because we'll see what the results are. But the question is a bear market coming? And we all know the answer. The answer is it doesn't really matter, but I will end that poll here. And out of the few that responded, okay, 26, not bad. We had 80% of you said yes, 19% said no. So the majority of you feeling like there is a bear market coming. And again, I don't want to make it sound like it's this horrible, catastrophic market sell-off that's coming, but there looks to me like a high probability of this market turning around and drifting to the south side here as we come into this overhead supply. So let me run through some of the statistics and some of the numbers that I'm looking at. I'm going to go through some good stuff and I'm going to go some bad stuff. Actually, let me start with the good stuff. So when we look at the good stuff, it really revolves around earnings. And we had earnings reports last night with Palo Alto Networks. You had some reports yesterday was also Toll Brothers. And it seems like just about everybody did well yesterday with regards to earnings. Estee Lauder beat, Palo Alto Networks beat, and those are kind of the main ones there. For today, I'll bring up your earnings calendar and share that with you guys. Here you go. You had Lowe's beat, Medtronic's beat, you had Toll Brothers beat, and you notice a lot of beats here. A lot of people beating earnings. So that that's one of those good pieces where the numbers have been getting pretty good as they come through. Again, Palo Alto Networks, which reported aftermarket yesterday, did very well. So we've got this good news with regards to earnings, and that feels like it's kind of gone through the earnings season. And of course, some of these firms are even out there raising their forecasts, which paints a rosier picture for our markets, not one of recession as many people believe we may be headed into. So I'll start with that. The second part is the US dollar, which I brought up the other day as being an area of concern. But one of the more concerning levels for me is the US dollar, in particular, that dollar index. And I'd drawn a red line on your screen. Here it is right here. That red line being about 102. And I made the point, like, look, if we get below 102, then we could very easily come back and test some of these lows. And lo and behold, we broke it. So, does that put this low point here about 100 in play? Yeah, I think it does. What about this one that's even lower down here towards these July lows? Yeah, I think that, your 99.75 level potentially is a target here. We've broken out of that kind of, at least broke through these areas of demand, which has been bouncing off of since January. And now you're at the lowest point of the year for the US dollar index. This is not good. I believe this has a lot to do with the carry trade. People are selling dollars and buying back yen to cover those carry trades, which could be upwards of $1 trillion. The number is not quite known yet. So this is a pretty bad one, although there's a trick to this. Because historically, when you have a very weak dollar, it's really good for domestic markets. So if the US dollar is dropping like this, down the road, we should start to see better economic data, because what that means for domestic producers is they can sell more goods and services to foreigners. Foreigners can buy more of those products. So that was one of the reasons that we saw the dollar so low in the past. Print a lot of money, get it out there where the dollar gets cheaper and cheaper and cheaper, drop yield so people don't want to hold the dollar-denominated assets, and that pushed our dollar down to historic lows. Then all of a sudden we saw it surge back to the upside. Well, this is an interesting turn of events, because as this goes lower, it should start to help the markets, but I think the market's already in good shape. So not quite sure what to make of this, honestly. It kind of perplexes me, because historically, when you see this drop to this extent, what you get are bullish moves in the equity markets. But we're not seeing that right now. We're not seeing these equity markets have a tremendous surge since June. Has it been strong since June? Yeah, but we've also sold off, right? We had a nice big sell-off, and now we're rallying back up on the S&P 500. So kind of shocked at the lack of reaction to the US dollar drop here. My guess is, or my assumption here, is that momentum is going to continue. Again, the trend is your friend till the bend at the end. So I am anticipating this dollar continuing to drop, which makes for great opportunities for anybody trading Forex. And so this Japanese yen today, over the last 3 sessions, have a very nice move to the downside, and some of these other ones also performing fairly well recently. Because that dollar weakness, look at the Aussie dollar. Aussie's just ripping to the upside, obviously because the dollar's tanking. And then you have the euro, right? Euro coming right back into these highs we haven't seen since December of 23. And after that, you're looking at that high point peak right around 112.50. If we get above that, you got to really zoom out to try to find levels that this could run into. So all in all, looking good from a trend perspective for everything but the dollar. Dollar trending to the south side, all this other stuff looking rather bullish at the moment. So US dollar, keep your eye on that one. That to me is a pretty important part. Will the Fed be lowering rates because the dollar cause the dollar to drop? Good question. So by lowering rates, what you're doing is you're discouraging people from buying treasuries or bonds. Why? Because the yields drop and they'll be looking for elsewhere to park their capital. Now, of course, the U.S. is probably, I hate to say this word, the safest place to own government bonds, just because it's backed by the full faith of the U.S. government. But yes, lowering rates, lowering yields should drop the dollar as well. So that may be a factor to this big ebb, is the fact that I'm pretty sure we're going to see next month. I don't want to say a foregone conclusion because that's a bit too much, but let me bring up our Fed Funds futures table here so you guys can see it. I got rid of a lot of my tabs here, so it's taking me longer to find where I put stuff now. So here you have the Fed Funds futures for September. And notice the odds are getting even better. Right now it's a 67%. The markets have pretty much guaranteed a rate cut in September. That's going to be on September 18th. They pretty much guaranteed it. What they don't know is what's it going to be, 25 basis points or 50. Right now, there's a 67.5% chance of a 25 basis point cut and a 32.5% chance of 50 basis point cut. Personally, I would say the Fed would be off their rocker, idiotic, to go 50 basis points. There is zero reason for them to go 50 basis points. The only reason they even want to drop right now at all is just a political move. Our markets are doing okay. Nothing is so outlandishly bad that we need to start cutting rates. However, we know that there is a vested interest in all of our elected officials, whichever side of the aisle you're on. They want this market to keep going up because it makes their administration look good, whether you're talking Democrats or Republicans. If the markets struggle in our current administration, Republicans will blame the Democrats. If the markets do well, the Democrats will say, hey, we did great, look at us, vote for us again. And if the table was reversed, it'd be exact same thing. So I personally think you'll see the 25 basis point cut. If we see any damage to GDP, inflation, or unemployment numbers by the end of the year, we might see another rate cut. And it does feel like we're going to get two. But because of this most recent talk track, and by the way, Jerome Powell is speaking on Friday. So he'll be speaking on Friday at the Jackson Hole Symposium. Let's just go look at December here real quick. So going out a couple of months, going to the end of the year, man, I mean, there is all but guaranteed that we're going to have 3 rate cuts by the end of the year, according to the Fed funds futures. There is a 3% chance of 150 basis point cut, a 21% chance of a 125 basis point cut, a 44% chance of a full 1 point cut, 100 basis points. That's nuts to me. I want to screenshot this one right now, just because I don't buy it. I do not think that is going to be. There we go. I'm going to keep that one from my books. I think that this will look very different when you get to the end of the year. You know, with something like this, what this is forecasting right here is a recession. This is people saying U.S. markets are going to go to hell in a handbasket between now and December. And I just don't see it. You guys type in the chat. What do you think? Do you think that the U.S. equity markets are going to go to hell in a handbasket? Remember, I don't mean slightly down. Not slightly down would be one cut. But to have the expectation that over 50% of the people are agreeing at 1 full point or more means this market's going to implode from here, that we're going to see some serious problems between now and the end of the year. I see a correction, I see a sell-off, but I don't see a market implosion that all of a sudden the Fed has to come to the rescue. You guys tell me. Yeah, Oliver, I'm right there with you. That's crazy. A full 1% down? I don't see it happening. I think it'd be irresponsible by the Fed, because then all of a sudden you're be fueling the inflation fire, which you've sworn to get under control. If Jerome Powell is adamant about making sure that inflation is done, dead, and over with, there's no way you're going to see 4 cuts by the end of the year. Even to see 3, I think, would be irresponsible. 1 for the election, 2 maybe for good measure, but I can't see anything more than that. So yeah, Big Eb says, will the Fed lowering rates cause a dollar drop? Yes, it will lower. Technically, it should lower the rates. Now, it depends. Does that long end of the yield curve drop as well? Right? If that long end of the yield curve keeps rising, well, that's going to bring in more money to buy those bonds, right? If the whole yield curve drops lower, which let me bring up a picture of the animated yield curve for you. Jeez. This is a great resource for you. I'm sure you guys have taken this one before. Here is the animated yield curve, and look how high that yield curve is. It's way up there. So yeah, the Fed's going to lower the short end of the yield curve here, and maybe it drags it down. But does the long end drop? That's the question. If we go back here, let's go back into, here, look where we were in 2016, right? This was when we had the fuel for inflation, because everything was really cheap, the dollar was really weak, and then all of a sudden that whole yield curve started to lift up because of future expectations. Even into 2019, we had a pretty flat, low yield curve, and then all of a sudden, boom, we just shot up. So yeah, this is going to come down on the left side of this yield curve. The question is, how far, right? Does it get down to 2.3%? No, I don't. Not by the end of the year, it ain't. I'll put money on that one. You guys can take that bet. We're not going to see the short end of the yield curve drop to 2% by the end of the year. No chance. So yeah, I think that these markets are overreacting, overthinking, and I don't know why that is. Maybe it's just a speculative play to manipulate the people, but based off everything that's in front of me right now, there's no way you'll see a full 1 point cut. Not a chance. No way. But I guess the probability here says that there is a chance. I think that by year end, this is more reasonable. 1 to 2. All right, let's see. What do we got here? I had a whole bunch of comments. Is that probably good for gold as well? Absolutely. And notice what's been happening with gold on this kind of expectation that rates are going to get cut. Here is your gold chart right here. All-time highs again today. Right? We talked about this one having broken out of kind of the sideways channel that was in from April through July. All of a sudden, higher highs, higher lows. And I've been saying for the past couple of weeks, it looks like you're going to see higher highs for this. Where's it going to turn? I can't tell you because it's at all-time highs. And I do think gold's going to continue to move the upside. I'm happy for that because I do own gold. I'm long physical gold. Yep. He's shooting. Don Fond is making a fortune short on USD JPY. I don't know how to trade Forex. Oh, it's easy, Lori. It's the same thing as trading any stock. If you think the dollar is going to go, so here's USD JPY, right? If you're trading spot Forex and you believe that the dollar is going to down, you just simply sell USD JPY. What that means is you're selling the USD and you're buying JPY. That's essentially what that means. So this is pretty easy to trade Forex. If you think the dollar is going to rally here, you would buy USD and technically you would be selling JPY. It's just part of that currency pair. Let's see. He's shooting for $1 million. Good for him. I would assume impact of Fed lowering rates has to some degree been priced in already. I would agree with you, Liz. I do think so. But what I think is priced in is 25 basis points. I don't think that a full point is factored in there. No way. I think that most traders are going to look at that and go, no, there's no way you're going to get a 1% cut by the end of the year. Remember, I mentioned last time, we only have September, right? If we look out here at the calendar, you've got September, November 7th, and then December 18th. Those are your only 3 meetings for the remainder of the year. So if we get even 1 full point, that means at least one of these 3 meetings has to be 50 basis points. Why? I just don't see it, but I could be wrong. You know, what this means to me is when we get to those dates, and mark them on your calendar, September 18th, November 7th, and December 18th, those 3 dates should be critical for all of you, right? I don't know what's going to happen to those. Best practice is probably to be flat and out of those markets when they make that announcement, because if he does surprise for whatever reason and shock and say, hey, 50 basis point cut today, oh man, you're on the wrong side of that one. Prepare to see your account disappear. I mean, it'll go very, very quickly. Hi, Rita. I was agree. The trend is my friend. Yep, that it is. There you go, Steve. 1 for the election and 1 for Christmas. I think that's right. Liz says anything more than 25 basis point cut in September would send a message of panic to everyone. I agree, Liz, 100%. And remember, we've been paused for so long. And when we look at the chart of this, let me bring up, I think I have it here. Let's go out to, I got to go out to September 18th. So bear with me as I do a little bit of manipulation here. If you go out and just see what they've done, the only time that the Fed has gone crazy and done 50 basis points is in times of serious financial panic. And that was back here. We did, you did, what's that? Was that 50? We did 50 basis points back in May of 2020. 75 basis points in June of 2022. Let's see, 75 basis points again. So these were 75 basis point increases. That was pretty significant. And then we slowed down. There's 50, and then 25, 25, 25, hold, 25, hold, 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 hold. That would be silly if they did a 50 basis point drop, right? It was just logic to drop 25 basis points. But anyway, we could spend a lot more time on this. It'd be great if I could get someone on from the Fed to talk about it. But of course, I don't have the time or effort to go find someone to come on the program. So yeah, I don't think it's going to happen. And it might make for the move like in September, you know, there's a 60% chance of a rate cut of 25 basis points. I think that will happen. If we get 50, you know, that market will probably have a pretty significant pop right away because that means you're juicing that market. But I'm expecting only one 25 basis point cut. All right, what else I have here? In my opinion, 25 basis point cut September and then another 25 basis point cut. That's it. I think so too. I think 25 and then see how it is. We might get one in September or November, but I just don't see them needing to do that many. The rate cut percent depends on the unemployment rate data, in my opinion, and inflation, right? Remember, that's their 2 mandates. So if we look at the unemployment numbers, which we have been looking at, let me see if I can find it here. There's the unemployment rate. It's going to take me a second. It's always on Friday, so let me bear with you here as I rip through this just so I can find the unemployment rate. Come on. There we go. So U.S. unemployment rate here. It doesn't look dramatic. This does not look bad at all. But when I go like this, now it does. Right? Now it's like, oh, man, we have a problem. But it's not that bad put into perspective with historical data. Right? We're nowhere near these, 10% or 12 or 15%. We're at 4.3. The trend is up, and that's growing. And I have heard a bunch of numbers about more people looking for work and trying to find new jobs, and that could get worse, but I just don't think that this is that bad yet. That's bad yet. I think another Bill Addis show is brewing. Yeah, why not? September 18th might be a bit too long to wait to get him on, so maybe I'll try to get him on before that. Usually I bring him on the Fed day, so we can have him on the Fed announcement day, so we'll see. Okay, so that was the US dollar. One little bit about oil. There's all kinds of talk in the Middle East about a truce between Israel and Hamas. I guess Israel has agreed to it. Hamas says, no, we haven't, and then all of a sudden they say, yes, we have. This kind of drama is going to have an impact on oil. Who knows exactly how that's going to turn out, whether that does actually act as a ceasefire or we all of a sudden see a flare-up in aggressions. It looks to me as if a ceasefire is priced in. If you look at the way that oil has sold off, we talked about this as a bearish harami right back here, August 12th and 13th. You had a bearish harami formation. It's been falling ever since. And we're coming right back down to those lows, right around 73, 72.50. To me, that's a pretty logical point for it to come down to. And if it does come down there, we'll have to reshape this triangle because it was a pennant formation, which was, sign of compression. Now it feels like this line on the bottom is no longer trending that way. It looks more like this. So now we have a descending triangle on our hands here, which may put further pressure to the downside on this one. But the bounces are becoming less and less significant, right? They're getting each move up in crude oil does not make a previous high, gets lower, and now we're seeing those lows come back in right about the same. So this is shaping up to be a pretty bearish formation if it does break down below, let's say 72.50. So we'll see how that one pans out. But right now, I asked AI to create me a picture that looks like kind of chaotic scene in oil and gas, and this is what it came up with. This is not what the scene looks like right now. That might have been like Kuwait in Desert Storm or something when all the wells are being burned, but yeah, anyway, we'll move on from there. So that was the oil side of things. Then I have one more issue before I want to get into the pattern side of things, and that's going to be Boeing. I may actually get another chance at Boeing. There have been more issues for Boeing. I don't know if you guys saw some of the headlines out there for Boeing today. I'll bring up the shares for you. Boeing was down a little over 4%, and is down in the after hours just a little bit because the FAA is requiring them to have their planes inspected again. This time it's the pilot's seat. The seats in the cabin, apparently on some flights they've moved forward and deactivated the autopilot. One of the stories I was reading said the seat moved forward, deactivated, hit some switch, and the plane dropped like 400 feet in just a couple of seconds, and a bunch of people were injured on that plane, getting stuck to the ceiling. Who knows? I am hoping that Boeing continues to sell off. I would love it. I told you that line that I want to get at is 140. If I can get the right premium, then I will be selling Boeing 140 puts. But I got to get the right premium. I need to get at least 1% for the risk that I'm going to be taking on that one. But I think long-term Boeing is going to be absolutely fine. But I'm just being very picky and a little stubborn on waiting to get the price that I want. That to me is the essence of trading is I may think Boeing's great for the long haul, but at 177, 172, it's not good enough. I need it at 140. That's a better bang for my buck, and I'll wait for it to get there if it gets there. So, other than that, from my portfolio, I didn't make any new positions today. Nothing today. I was kind of, I want more of a sell-off in our market, and maybe I'll start selling some more puts here. But right now, I didn't see anything that really jumped out at me. I could have done IWM or Russell today, but the picture doesn't tell me that that's a selling opportunity quite yet. All right, let's go to the picture here that I started the show with, which was, is a bear market coming? Now, we can go back through historical data and look at, August, September, October were historically a slower period. We can talk about the crashes in October, September's negative months. That's all fine and dandy. That's statistical. We'll see what happens. Everything begins with a simple move. And I'm going to run through some of these markets here today. And I start with the Magnificent Seven, which for me is leading the market, right? The Magnificent Seven is the king of kings still at this point, and they're the ones driving this whole surge to the upside. So we look at NVIDIA. So there's NVIDIA. NVIDIA now closed this gap, rallied up. It's not like it's in a strong area of supply. I don't look at this and say, oh man, it's going to come crashing down from here. But you do have today the first weakness that we've had since early August. And that is a bearish harami formation. You guys can see it right on this chart here. You got this big green candle yesterday, came right up into this little area of consolidation that went back to July 12th and 13th, or July 15th. And here we have that bearish Rami formation. So if you're looking at NVIDIA for tomorrow, there might be an opportunity if we open up above 125.89 and start to drop down below that, prepare your short guns and look for a short trade. I will be as well. So that's NVIDIA, which obviously is such a powerful piece. Then you have Tesla. Now, Tesla isn't really doing anything on the daily chart that's that significant, although it has rallied back up to the origin of this last big sell-off. So we could, if we so chose to, draw something like this, which would give you a kind of a supply zone to target, and we hit it today. So you have, yeah, exactly. This week, we got earnings coming up, Oliver. I got that earnings coming up. So that's, again, be very, very careful with that one. But Tesla also coming into a supply zone, although I'll argue this is not a great supply zone, but that's somewhat bearish. You have Meta, which isn't in a supply zone, but has actually hit that all-time high. Going back, here's your all-time high from July 8th, and we came right back up to that one, formed a double top, and now starting to sell off. You had Apple, which there's really nothing here on Apple I see as negative. Google, though, has a shooting star formation after it jumped up here and closed that gap from August 2nd. So I'm seeing a lot of these, not FANG anymore, the FANG is now gone, but Magnificent 7 companies with some relatively bearish formations. And if I look at the broader indexes here, here's your NASDAQ, right? We're coming right up into that area, which was the origin of one of the bigger red candles we've seen this year, which was on July 24th, right? Right back up into that one. And then S&P actually broke above that zone. It's now closed. It just tiptoed above it today, and now you're closed back inside that zone. So it does feel like there's some weakness coming, although I'm still looking to go long until I get some lows put in. It's got to break below some of these levels, and then I'll look for the short guns. But it feels like it. It does feel like we're starting to see things slow down just a little bit, even though with that big momentum swing, profit taking is probably about to come in simply because we have such a dark cloud over the month of September and October. Oh, thanks. Thank you. I really envy. I could have sworn it was this week, but I could be. Yeah, there it is. It's the 28th. Thank you, Liz. Thank you. NVIDIA is the 28th, and then AMC. Man, I'll tell you what. I actually went to a movie the other day. AMC was a while. Oh, after market close. I went to an AMC movie theater the other day. It was great. I saw Deadpool, the new one. Oh, man. Violent and crude and just what I like. Love that one. But man, full-on reclining seats, heated seats, very spacious. It was set up so I didn't have to look at anybody else's cell phone. But anyway, who cares about that? It's NVIDIA that really matters. So back to that NVIDIA chart. Yeah, we have 2 weeks. My bad. For some reason, I thought it was this week. But yeah, it's the 28th, which will get you next week on that earnings. So if you do play this one, you have plenty of time to jump out before that earnings comes in. Now, the last one on there, I guess, which is no longer a Magnificent 7 anymore, NFLX. Yeah, absolutely crushing it. There's your Jim Cramer buy call. We have now exceeded that. And is it all-time highs? It is all-time highs on NVIDIA. Wow. Or not NVIDIA, on Netflix. Man, what a significant move out there. That's a shocker to me. And maybe this is just a result of, charging people for the multiple accounts. And I don't know where they're getting all this revenue. But up 21% in the last 11 days. That is a pretty significant rally there for NVIDIA. I hope you're long on that one. Big Eb. I think that just about covers it for me. Didn't like the cameos. Oh, Oliver, that's actually what I thought was my favorite part, was all the hilarious cameos in there. Steve, that's funny. See, Jim Cramer was right. He's so smart. Yeah, it took over a year to get there, but Jim Cramer was right. If you wait long enough, you can pretty much lock in any bull market call. It'd be like me saying, oh, you know what? Dow is going to go to 50,000. Dow's going to be at 50,000, right? I know I'm going to be right. I know I will be right over time. It's just a matter of when, right? Because markets are built to go up. Dow right now is at 41,000? Yeah, 40,994. Yeah, it'll be at 50,000 someday. And as long as I wait, I can always replay it back and then gloat about my amazing call. Just like my favorite trader out of Chicago, who just draws lines on charts and pretends he made all those trades. But, whatever. To each their own. Netflix is hot due to NFL and WWE coming out. Oh, God. Do people still watch WWE? When I was like 12, 13, 14, I loved watching wrestling. That was fun. And I realized it's just choreographed dancing of overgrown, sweaty, steroid-injected men. That's really not my thing. Now, NFL I get, but, if you know the internet, you don't need to buy the NFL package. You don't need to buy. Why bother spending on NFL package? The NFL Sunday ticket's expensive, man, for what you get. And I'm an NFL fan. And pretty soon they're going to change all the rules where the NFL is just going to be flag football, glorified flag football. I want the days of Ronnie Lott. For those of you who might be a little bit younger, go to YouTube and type in Ronnie Lott, L-O-T-T, greatest hits. That guy would take paint off helmets and make receivers afraid to catch the ball because he would just annihilate them. Such a stud, he broke his pinky before a playoff game, and instead of taking some time off because he broke his pinky, he actually had it amputated. He cut his pinky off so he wouldn't miss a game. That is an NFL player. Nowadays, you got these gigantic foam helmets, and they touch you wrong. Oh, you hurt the kicker. NFL's gotten soft. It's the male soap opera. It is. Totally is. There are other 13 and 14-year-olds, Tofi. You're right. Well, it must be waiting for gold at 1,000. Oh, is that one of his levels? I'm sure he is. Yep. Okay. I mentioned I wanted to do a thing with credit cards, but my schedule is so unbelievably busy right now. I have not had a chance to get to that. So unfortunately, it's going to maybe take me a couple more days to get that done. Let's see. Mike says, people are decent about turning off their cell phones, but what they cannot control now is the bright light that comes when their Fitbit watch or Apple Watch lights up a message. Yeah. And you mean in movie theaters? That's why I stopped going to movie theaters, is because of people on their cell phones. But yeah, you're right. Troy Polamalu was good, but he was in a softer generation, right? The 80s, you could paralyze somebody with the hits that they were allowing. Nowadays, you can't hit like that. You cannot hit the same. Even going into the 90s, you could not hit in NFL the same as you could in the 80s. Like, it was pretty much lawlessness. Just, hit him. You want to tackle him? Go for it. However you want. Just bring him down. Horse collar, clip him at the knees, whatever you want. Man, Ronnie Lott. There's videos where you see a receiver just about to catch the ball and he sees Ronnie coming and they just stop. Like, nope, I'm not going to take that hit. Nowadays, you get much better receivers. Like, the receiver statistics today are way better than they were back in the 80s because receivers are all protected now. Oh, pass interference, penalty, you touched him, you can't do that. Yeah, back in the 80s, man, it was like gladiators. Now it's like flag football. Yep, I like Troy Polamalu. Anyway, give me another couple days to do the credit thing just because I want to have all my ducks in a row and make sure it looks really good for you. And there's a lot of information to cover there. I just got so many different things going on, and I'm kind of hoping the dust will settle here soon, but it's not. It feels like there's more and more dust kicked up. So, regardless, unfortunately, a lot of those guys don't live long due to getting hit much. Yeah, a lot of mental issues, brain damage, and just major health issues. Running backs don't last more than a few years, and a lot of them have real bad aches and pains. But, that's also a choice. Not to sound heartless, but, if you're making $30 million a year as a running back, that's what you're getting. You're going to get hit. That's your job, is to be hit. If you don't want to be hit, play baseball. You'll last a lot longer. If you really want to last longer and not have brain damage or, lose your knees and tear your ACLs, then get a desk job, right? But you're not making $25 million a year. Let's see what we got here. Flag football will be in the Olympics in 2028. Yeah, I know. I saw that. Are you going to watch it? I don't know. I feel like it'd be kind of silly, flag football. And, let's say, for example, you are Miami Dolphins. Do you think that there's a chance that I'm going to let Tyreek Hill, who's the fastest guy in the NFL, who would probably do amazing in flag football because you just can't catch him, do you think that they're going to let him go and play in the Olympics? I don't think so. It's too much of a risk to my team to have my athlete go out there and get injured. You seen that weird rule? Yeah, the kick. I'm not a fan of the kickoff either. There it was, CTE. Yep, that's the CTE issue. Yeah, Tofi, play golf. See, here's the difference though. If you're a running back in the NFL, you're paid to get hit. If you are a golfer, you get mentally hit. Like, the psychological damage to a golfer. Like, I don't know if anybody here is an avid golfer, but if you have a bad shot and you shank it in the water, trying to recover from that is very hard. And next thing you know, your game just goes downhill. And I tie a lot of that into trading as well. If you have a losing trade, it should be no big deal. But if all of a sudden you have 4 or 5 in a row, that's like 4 or 5 bad golf shots. 4 or 5 bad golf shots, you pretty much ruin your score for the day. And then all of a sudden, mentally, you go downhill. And I think the same thing happens in trading, where if you have a few bad trades, it manifests. And then you feel like a loser. You feel like you can't do this. And then all of a sudden, it just gets worse and worse and worse. Stop. Stop playing. Now, in a golf tournament, you can't just stop and walk away. We have that luxury as a trader. We can just stop, walk away, and move on to do something else. So, yeah, be a golfer. I couldn't do it. I could never get to that level of consistency. And to Believable says, I am a huge fan of the Olympics. I definitely am a Olympics. But the breakdancing thing, it was pretty funny. I saw a meme. I wish I could play it for you. It said like contractors, and then at the top it said contractors, and then it said what we thought we were getting. And it shows this breakdancer, amazing, head spins and flips and tricks, like, wow, that is incredible. And then it shows what we actually got, and it shows that what's her name, Ray Gunn, just flopping around and grabbing her feet and doing all kinds of silliness. The good news is I think breakdancing will not be in the Olympics anymore. Congrats to the guys that are actually very talented and did it. Really kind of shocked at the approval process and how someone that didn't understand what breakdancing was got allowed in there. But hey, I tell you, I'm not joking. I'm an older guy. I could have beaten her. I breakdanced a little bit when I was a kid, and I could do backspins. I could do windmills. That girl couldn't do any of it. Same guy who plays flag football was upset at Jalen Hurts for promoting the event of the Olympics. Oh, some guy. Who knows? The thing that we should be upset about is this, in everything in life, things change, and political or different affiliations can modify the way that things function in our lives. The fact that boxing may be removed from the Olympics is more upsetting than the fact that breakdancing or flag football is being put in. Add more sports, that's fine. But if you look back to medieval times or the times of the old Olympics, is boxing and wrestling. These are like core elements of Olympics. And I heard chatter that's going to be taken out, which really was shocking to me. But could you... Alyssa, but she could do kangaroo impressions. When she started going like this and hopping around the stage, I lost it. I absolutely lost it. I thought that maybe she was drunk. Like, did she just pound a fifth of whiskey before she went on stage? Like, what? That's breakdancing, hopping? Oh, man. Sorry. All right, let's move on. I'm going to wrap up here. Let me get into your economic calendar for tomorrow. There really, as far as economic announcements, there's not much going on. Let's go back to here, and we'll go to, today's the 20th, go to the 21st. Today was super quiet. Tomorrow we do have crude oil inventories, and you have FOMC meeting minutes. I don't expect too many surprises from the FOMC meeting minutes. What is important is what happens on Friday. Again, we know what Jerome Powell is going to say. Right? I don't think there's any surprise here about what Jerome Powell is going to say. He is going to say, at this point, the U.S. economy is feeling rather robust. There's a lot of good numbers coming out. We are a little concerned and keeping an eye on the unemployment rate. We're very happy to see inflation now down below that 3% line at 2.9%. Our target is still 2%, but we're making great progress, and we will stay the course right now until we get those rates down to where we need to be. The big question on Friday, and this is the huge question, does he say anything that confirms traders' speculation, including mine, that September 18th is a rate cut day? If he says we are going to hold rates where they're at for an extended period of time, then September 18th is off the table. It will be gone. It will not be on the 18th. But I'm pretty sure he'll say something of, we feel like we're getting closer to the point where we may drop rates a little bit to help the economy and help things out, but we're not quite there yet. I think he'll open the door by saying we are looking at lowering rates here soon. And by saying soon or in the near future, that could be either one of these next 3 meetings, but that's pretty much what he will do. Yep, we are data dependent, right, Big Eb? That's it. We are data dependent. And that's why I did that show with you the other day. We ran through all the data. We ran through probably more than they're supposed to look at, right? Remember, they're looking at inflation and unemployment. And we looked at GDP. We looked at all sorts of retail sales. We looked at tons of different data points, and most of it was pretty good. Not amazing. It's not like we're going back to the roaring 20s from an economy perspective, but we don't need that, right? I don't think anybody wants that. We would just want a nice, stable footing to grow and make sure we don't have any economic disasters. That's really what we want. And if we go back to the roaring 20s, type of market, we will have problems. Anytime you have that massive economic surge, you're going to have a pullback, which is why I've been so concerned for the past few years because of what's going on with our market. So absolutely. So there's your economic. As far as earnings go, you do have some announcements for tomorrow. Let me bring that up. The big stuff, I think, is, actually this Wednesday and Thursday are the bigger days for earnings. We have Target, Macy's, TJ Maxx, Urban Outfitters. You have Agilent Technologies. You have Analog Devices. Let me see. I thought there was a bigger one on here. And Synopsys. Snowflake as well. Let me check out Snowflake. I was bearish on that one for a while. Yeah, we've been drifting lower here. Nice rally over the past couple weeks, but still not back to those higher levels. I was of mind when it did its IPO that we were going to be down below 100 at some point, but not quite there yet. We got close. Got darn close to it. So that's pretty much it for your show for today. Again, I will try to get a credit show for you guys. I might be able to do it on Thursday, but I just got too much to sit and prepare for that one. This stuff takes a bit of time for me to get all the ducks lined up in a row and make sure the show goes well. But if you have anything else, any other topics you want me to discuss on Wednesday, Thursday, or Friday, just email me at TraderMerlin@gmail.com, and I will hopefully have some time to build out some content for you guys. Maybe just talk about shows or trades that we're going on. So thank you guys so much. Hope you have a fantastic remainder of your day. I will see y'all tomorrow. Take care.